Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, September the 20th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. But before we get started, I just want to remind you these videos are for educational purposes only, and your results may differ from mine. Also, don't lose any more on any one trade than you're willing to lose. Keep your risk. Keep that stop loss in place. And, you know, when it comes to trading, your brain, you have to manage it. Because if you let fear get a hold of you or you let regret take over, you're pretty much going to be doomed. And on the money management side, you don't want to be too greedy and you want to make sure you take your profit before the market takes it back. Now, you might want 10 pips, but if all the market's going to give you is 5, you better take those 5 before it's at -5. So, looking at the weekly chart, you can see that it looks like the pound gap down, but it's already filled it. Doesn't look like too much of a gap there. And we have a handful of gaps that haven't filled. So we might be taking a look at trading one of those and see if you can take advantage of the gap fill. It looks like the dollar yen might be a good contender. It's only 4 pips below the open at the moment, and it gapped down 10, so it just went to 5. Might be some action there. Now we're putting in the opening range for the week here. Here's the opening range for the month of September, and here's the opening range for the year. So you can see what's happened. And for the year, we're down 299 pips. For the month from the open, down 421. But so far, we're up on the week and the day. And last week, we put in that inside bar. So it'll be interesting to see if it breaks out of the high or breaks out of the low. Seems like it's closer to the high, so you might want to consider that as a long trigger. And we've only got one pair over 100, and that's interesting. The pound Australian dollar. Maybe there was some Australian news that happened. I can see the pound New Zealand's also close at 97. So there must be something going on. The pound pairs are heading north. On the buy zone, here is the open. You can see there was the previous week's close. And here was the pivot point. So we got a long trigger. And you see we've taken out the pivot, the daily pivot. Rats, it's large enough, but only by a couple of pips. Not much action here. Rat action. Usually I like to see this number somewhere over 80, and on the pound usually over 100. And I think you've seen those charts with the smart ranges and you would understand why. Okay, weekly pivot 1.2899. So let's see if we revisit the 129 level. And once again, we've taken out that daily pivot for the pivot traders. You can see here we took it out. Pivot above, a pivot below. So considering where that inside bar was on the weekly, it looks like this pivot might get taken out. We'll just have to wait and see this daily pivot. And when we look at the weeklies, you can see the weekly pivot for this week hasn't been touched yet once again. So there might be a chance that we take out that pivot. In and out of the lower wick zone. Simple price action trading here. And I was talking about the range, so you can see here on the daily. That's why I said I like to see it usually over 80. Friday we had an 85, but the prior 3 days were all over 110. And then if you look here, the high minus the close, here it only pulled back 6 pips, but 77 and 26. So rats kind of got stuck in if the green rats, it got stuck in that green rat zone. Usually doesn't do that. So if we look back here on a daily chart, wait, that's interesting. That was the open high minus close. Let me look at that again. Oh, that's today's. No, oh, that's why it's only 6. This was Friday's. So you can see here, it has pulled out of that upper rat zone. And so for today, we're 6 pips below the daily high, and the current low, we're 38 pips above it. But we've only got the 43 pips, so we really need to see that above 80 before you start looking for rat reversals. At least that's the smart way to trade it. You might pick up some, but the smart way is usually to wait to get that range. So it's somewhere once again over 100. And you see, even at 111, it's only at the 44 percentile, meaning there's only 44 days out of the last 100 that had a range less than 111. Oh, and for those of you who are wondering, and that's the smart ranges indicator. Yes, that's a donational. And the indicators are to put out the lines are the TROHL5 and TROHL. And TROHL, it just simply plots the high and low for whichever period and for whichever shift. It just does that one simple plot. Whereas HL5, it has so many more controls as you've seen. And those two indicators are free to download, just like the rat zone. And HL5 will even plot the rat zone. I've showed those on videos too. In fact, there was a trader that suggested that I make a bunch of playlists. I said he's trying to create work for me. All you have to do is go to the channel and search on horizontal line or rat zone or wick zone or buy zone or even squiggly if you want. And then you can watch the videos. I think I've put out over 1,000 videos, so it could take me a while to assemble a whole bunch of playlists. I do have a few playlists that I've done lately. So if there's anything that I'm going to do a series on, like I think we were doing the trading for a living. Maybe I'll put that into a playlist so people can watch. I think we've done 3, maybe 4 videos on that. I think we're up to part 3. And then just looking at a simple trading screen, we've got the Wall-Mall lines. We're on the M5 time frame. So you can see here, where did price open? Price opened here, crossed below, gave you maybe a pip, then reversed above that 50 line. So on the Wall-Mall line, there was a short here. If you're doing a dynamic support resistance type reversal off of that 3 ball, the trigger would have been down here. We did open below the mid dot, but not much happened. There's an inside bar. That's what that vertical aqua colored line is indicating. And you can see prices broken out of that inside bar. So right now, if you took took the break of the inside bar, you'd be up a pip, 2 pips. No, 1 pip. Right there, 1 pip. And, I've been watching and looking at other channels and the guys going for those huge pip runs. And, if that's what you're good at, then by all means go for it. But I just seen so many traders, they could be up 20 pips, and the next thing you know, they didn't take the pips off the table because they were shooting for 200 pips, and now they're hitting their stop loss. But usually, they're trading for, 0.01. So if we're talking a dime a pip, it's no big deal. But, I don't think they'd be doing that with a lot or 10 lots. I could be wrong, but I don't see too many traders trading like that with any significant size. And as you can see here, once again, you could have had a pip. So at $100 a pip, you would have been up 100, and now you'd be down. So that's why I say you have to take those pips while you can. And right now is not really a great time to trade, unless maybe you're trading Australian pair or New Zealand pair, because the market's only 4 hours old. So you can see right there. But we did have a nice move here. And as I've stated almost, or I should say on a regular recurring basis, you see why this method works is because usually the range on the hour is bigger than 10, so you can't fit something bigger than 10 between two lines just spaced 10 pips apart. So it's just pure statistics. The thing is, it's just simple statistics. And I'm going to give you a teaser. I'll probably show it on a video tomorrow. But I wrote an indicator because we always talk about stop losses, and I don't write EAs for public consumption. I don't even like EAs, but I have all these different training wheels type indicators. Well, this one, what it'll do is it will look and see if you have any open trades. And if you have an open trade and there's not a stop loss assigned to it, it basically tells you you're an idiot. So I was talking to one of the traders on the phone on Friday, and I forget exactly what we were talking about, but it kind of gave me that idea because, no, I will not give you code, an EA, that automatically puts the stop loss in for a simple reason. Let's just say for some strange reason, there's a hiccup and it doesn't put your stop loss in and you lose a bunch of money. Then you're going to want to blame me. You're going to say your code's junk, your code didn't work, I trusted your code. So there's so many things that can go wrong in it. And I have seen it because, basically what it does is it looks through and looks at your trades. But MT4 is kind of weird sometimes, and I've actually had maybe 2 or 4 or more open trades, and I had a EA that would loop through, and it went to I've got a close all button. You may have seen it every now and then. It might show up, might make an appearance. Well, what I had to do was I had to put a double loop in it, meaning so you have the inside loop would loop through all of the pairs that it says. Like it might say, okay, you got 10, or all the trades. You got 10 trades. So it would loop through all 10. But then I put an outer loop that says do this loop twice. So it would loop through all the trades at least twice. That way, if on the first pass it missed one, it should catch it on the second one. I don't know why that happened, but once again, if you're trading any size, you don't want to miss. So